Good morning, ladies and gentlemen, and welcome to the show this Thursday, the 20th of January, 2022. Well, we're in the end game now, guys. This is it. We're seeing gold and silver starting to take off, but crypto's had a little pop this morning. But in this end game, I'll tell you guys what, they're going to have to. Well, the Fed's way behind the curve on stopping inflation. And so they're going to come in strong and hard and fast. And, the system is too unstable for any sort of deflationary episode. And so the deflation's going to come hard and fast when they come. And it's not going to be in the consumer price index. That side of the economy is going to continue to inflate. It's the deflation's going to be in the upper echelons of the financial system, not in the general economy. You're going to still have consumer price inflation, increasing consumer price inflation, but the deflation part will be like in the equity markets and in the bond market, which is already starting to pop. They're popping it. They're going to have to come in and do yield curve control. There's no two ways about it because of the problem that they're going to create. They cannot let interest rates rise too much. They'll pop the housing market, and what's more is what they're trying to their own amount of debt that the United States government owes is astronomical, and even a small raise in interest rates makes the payments on that debt impossible. So they're very limited to how far they can let interest rates rise. It's all going to go back. This is just for a limited time, what's happening right now. And, if you see prices rising on things like gold right now, oh my goodness, wait until the shift occurs and they go back to their easy, loose monetary policy. In other words, they have to give up. They're forced to give up. And I know that I've talked about this a lot on my channel, but you have to figure this into your investment portfolio right now. What do? Well, they're putting it all on sale for you guys. And even gold and silver, you haven't missed the boat. I mean, this is just beginning. This is just the beginning of a 10-year bull run in precious metals, which is going to see, cryptos is going to have a bull run too, but it's not going to really get going, the crypto bull run, until after a change in central bank policy, which is coming. It's coming, guys. Today we're seeing the markets go up. But this is only temporary. We're going back to the volatility. And I told you guys there'd be up days. But overall, the picture it looks bleak until the central banks change direction on their policies. Until they lose a battle, basically. And that's what's going to happen. And they're already way behind the curve. And the effort that they're putting in is going to be in futility unless they let the system completely purge, in which case, you guys want to find out about that? I'll put a link in the description. I'm going to post a show right away on my Delta Report channel, and I go into depth and into detail, more so than I've went into most all of my videos. I mean, I really talk about what would be the effect of a long-term deflation where they let the system completely purge. What would actually happen? It's one of my longer videos I've produced. Generally, my videos run about 10-20 minutes. This is like a best part of an hour. Anyway, let's get started. Let's open up the charts right here. Take a look at what's going on. We're going to start with silver price today at $24.58. It's up 45 cents. This is just the beginning. Just in the early stages, but doesn't bode well for the dollar, honest to gosh. Maybe they're starting to figure it out. What I've been talking about for 5 or 6 years. And now it's $24.58 for silver. Let's take a look at gold. They're frightened. They're frightened. Fear and expectation of the things that are coming upon the inhabited earth. Right now, investors are feeling the pinch. They are in fear and expectation of market turmoil. This is what I created my channel for, to explain this market turmoil like 6 or 7 years ago. Never thought it would take this long, guys. But anyway, here we are. We're getting closer and closer, and you can actually start to see it now. I mean, way back when I started, you couldn't really see this. It was too far off for most people to see it coming. I say most. Now it's so close, a lot of the population is starting to see it, and more people are waking up in the general population. And it's still a small number that's waking up. You guys are the ones who are waking up first, but the rest of the crowd's going to wake up too, and it's going to be frightful when they all wake up. And they're all going to want in to precious metals by that time, and they're all going to want into cryptos. Not going to be able to afford to buy it because their dollars are going to starting to become worthless at that point. There's going to be a mad rush, especially by the rich, to get out of their bags of money and into something real. I say something real. All that money in the system is just a digital ledger now at this point. It's no more real than World of Warcraft money. Okay, so we're looking at cryptos today. And we're looking at it's cracked above the $2 trillion mark again. $2,039 billion. Let's refresh the page. $2,037 billion. Looking at a Bitcoin price of 43,288. Let's move on and take a look now at the Dow Jones, which is up 399 points. It's a nice little bit up today. 35,428. Now let's take a look at crude oil at 87.65. It's up 69 cents on the day, almost 1%. And now we're going to take a look at bonds and rates. And we're seeing the bond yields aren't really dropping. They're actually rising a little bit today. We had 10 years at 1.838. And the U.S. 30 years at 2.157. So my marker was at 1.75 on the U.S. 10 year. We're well above that. We're about 8 basis points above that right now. And so we're all set. Everything's loaded for this market crash. But I also told you guys that they get away with their first cut. Well, they've made the first cut and they're heading for the second one. I also told you guys that they're not going to get away with the second cut. Well, here it comes. It's just a matter of, what is it, a couple weeks away or something, And they're wanting to speed all this process up anyway. So, for you guys out there thinking, oh, they'll never do it, they'll never raise rates, they'll never try to balance their books or what's called quantitative tightening, oh, they'll never do it, watch them. Watch them do it. And as they tighten this tourniquet tighter and tighter, well, the patient, which is the world's financial system, is going to go into cardiac arrest as they tighten the tourniquet. And I can see this. This is obvious. And then they're going to have to change direction because they can't let the whole system go down. I mean, it would just go down the spiral and ball of flames, it'd be gone. The whole system. They can't let that happen. That's their mandate. And they've told you they're data dependent. What more do we need to know? We know they're going to turn around at a certain point. Just how far are they going to let this go before they turn around? Are they going to let it go into an absolute full-blown crisis? Maybe. Then what's it going to take to turn it around at that point? Well, it's going to spin us off in the other direction, toward hyperinflation worldwide. And, once that gets entrenched, once the hyperinflation worldwide gets entrenched, we're looking at a different world, guys. We're looking at, you cannot put a price tag on gold and silver and cryptos at that point, because look at all the value in the whole world of everything. Just drive through the street in your city and look at all the nice houses. Dive down the street where all the nice houses are on both sides of the road and think what those houses are worth in dollar terms. Now suddenly, they can't be worth, if we go into a hyperinflation, you can price them in dollars still, but the value of the dollar's losing purchasing power so fast that it'll exceed the price of everything can go up, like wages and house prices and everything. It can go faster than all that. So people want to get into something that is real and tangible. Now, real estate's real and tangible, but it's not going to keep up with the price of inflation, just like your wages aren't going to keep up, and a number of other things are not going to keep up. Gold and silver are. They've kept up all the way through history. They're not only going to keep up, but they're going to exceed the amount of inflation. This is why you can't put a price tag. $1,000 for an ounce of silver? $10,000? Well, what? Well, a tomato might be selling for $1 million at that point. Of course, the price of silver. You cannot put a price tag on it in dollars terms. And I know over the years we've tried to. We've said $50 silver, or so many people $200 silver, or whatever. We're just shooting in the dark. Because this is a hyperinflation. You can't put price tag on it. And are you going to want to sell it to some guy for dollars? Because if the dollar's losing 50% of its value daily, and your silver's going up by 100%, you're going to keep it. So it becomes something that is, oh, wow. What we're going to go through is going to be astounding in what's coming. It's going to yield a crisis of exponential proportions, huge proportions, unbelievable. So here we go. Let's take a look at the U.S. dollar index today at 95.55, and it's going along sideways today. Thank you guys for listening to my show, and as the price goes up on silver, it's just going to make them want it more, and they're going to want the real physical, and it's going to be harder and harder to obtain, and we could have, on top of everything we got going on, we could have a real silver squeeze, a real silver shortage where there's none to buy. Bye bye, guys.